Tax on pensions is actually a really tricky question that we get asked quite a lot, and that is really dependent. Firstly, if there is a dual tax haven agreement between the UK and the new country that you are now residing in, but there's certain steps that you also need to take when you've left the UK in terms of completing such things as a P85 form, where you're informing the UK that you're no longer a UK resident and now you're residing in the new country. If a DTA exists, it is possible when you start drawing down from your new pension, such as an international SIPP, for that to be actually paid out gross of UK taxation, and you just declare that income in your new country. That will only occur though if you've completed and reported to the HMRC to apply for what's called a nil rate tax code or an NT tax code. Whenever you go into drawdown, if you're in a new international SIPP set up by ourselves or by another provider, at the point of withdrawing they will request your tax code. If you don't have the correct tax code, they may apply your last UK tax code or an emergency tax code. So it's really important that you work with your advisor beforehand and before you go into drawdown to make sure that you've got the correct tax code before you make a withdrawal, so you don't get any nasty surprises where you're taxed in the UK and obviously you declare the income in your new country as well and then have to subsequently claim that tax back in the UK. It's much easier. Get the NT code, get the nil rate tax code, and then enter into drawdown.